This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on October the 6th, 2016. Our time is 8:34 Mountain. We say, Happy Thanksgiving long weekend to you and your family. Hope you have an outstanding time with your family and a great meal. Next week, we are going to be on from 2:30 to 3:30 prior to the Oilers and Sabres game. That's October the 16th. If you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes, so you can catch us anytime you want. As we tape today's show, and we are taping a day early, Harold, a Canadian who lives in the United States, he was in Colorado, came back to Florida, and now there's Hurricane Matthew that's going to hit Florida. They're talking about, in total, around $15 billion worth of damage. We'll get an update from Harold here momentarily. This week as well, the British pound down heavily, down to 1985 levels. The gold market, one day it was down $40 in one day. Silver down $1. Harold called it. A lot of people were saying, no, gold and silver are going to rally. Harold said, wait a minute. We believe that it's going to go down quite substantially yet before it goes up. Also, oil up, U.S. dollar up, and the Canadian dollar down. And Harold, give us an update on the hurricane, but as well, congratulations on your correct prediction when it came to gold and silver, because a lot of people were saying that they thought gold and silver were going up substantially. You were saying, no, wait a minute, and once again, you've been proven correct.
Well, at this point, Randy, thank you very much, but I'll tell you, this is like the calm before the storm. The last time that I was involved in a hurricane was 11 years ago during Hurricane Wilma, and it happened the day before my birthday. It happened on October the 24th, and it was unbelievable because the storm came in from Mexico, came across the Gulf of Mexico, across the Everglades, and I live right on the edge of the Everglades, and basically it hit my home in my area dead on. We had about $150,000 damage to our home, the roof, the screen around the pool, and all that type of thing. But after that, we have not seen a hurricane for 11 years until now, and this hurricane is massive. It's over 500 miles wide, and where it doesn't look like it's going to come land at my home, it's just going to hit land in West Palm Beach, which is unfortunately where my private showrooms are. However, again, at this particular point, I think everybody is prepared. I think the government is prepared, the state is prepared, and I'm just hoping for the best. The winds right now are about 120 to 130 miles an hour. So it's just at this particular point, as we're taping the show, at 10:30 Eastern time on Thursday, it's just absolutely decimating the Bahamas. It's going to hit Nassau dead on, and with winds of 120 to 130 miles an hour. It has come down a bit. The winds were as high as 150 miles an hour, Category 4 storm, and it looks really bad. So it's a very wide storm. There's lots of rain. We're expecting a tremendous amount of rain and high winds, and even though it looks like it could possibly hit just above us in Palm Beach, the fact is that we're going to probably get 70 to 80 to 90 mile an hour winds here, and on top of that, we should get a tremendous amount of rain. Then they're talking that it could actually go up the coast, possibly come close to Jacksonville or North Carolina, and then it may come back again. So, again, this is a very, very trying time, obviously. Not in the office today. I'm taping the radio show from my home. And just so everybody knows, and I want to thank everybody, I must have gotten 100 emails, phone calls, best wishes from my clients in Canada and listeners to the show, and I can't tell you how much that means to myself and my family that all of you are so concerned about us. I do want you to know that I have shutters throughout the entire home. I've got an underground propane tank. We've got food. We've got water. We've got supplies. We've got a generator. So we're very self-sufficient here, and I'm hoping that it's going to be almost a non-event. But it is concerning, and we will keep you up to date. As far as the markets go, that is very true, Randy. Everybody was calling for the gold market to go up, and I am predicting that the gold market is going to go higher, substantially higher, just not right now. We know that there's a massive short position in the market. And with all the fundamental news that's been in the market this year, with ISIS, with the elections coming up, with everything going on in the world, with Brexit, with the British pound plummeting, we'll talk about that in a second, all the currency markets going south, interest rates going almost negative, negative interest rates, negative bond yields, all these things going on, you would think the gold would be sitting at $2,000 right now. However, there's something that I've brought up almost every single show, which is a very large short position that the banks are holding, means that, in my opinion, gold has got to drop before it can go higher. And that's exactly what happened. Tuesday, the market dropped $40 in one day. Silver dropped $1. The thing is that we've seen several opportunities in the past several months for gold to break down. And every time it got down to 1310, where there was heavy support, the market would come back up to around the 1330 to 1340 to 1350 level. Actually, we saw a high of 1375, and I always had said that there's major resistance at 1380, and gold never broke above 1380. So with all this bullish news and all these things happening around the world, gold certainly had its chance to rally, but didn't do so. And the only reason that it didn't do it was because of the short position that the banks are holding at this particular point, which is the largest in history, which tells me no matter what happens in the market has got to go lower before it's going to go higher. And that's why I've been recommending to you to hold off, or just to know. You know, the fact is that we're not trading gold and silver. We're not buying in and out of the market. That doesn't make any sense. We need to hold on to gold and silver for the long term, because there are going to be repercussions. There's no doubt about it. But at this particular point, one of the most important factors in the market is the U.S. dollar. This is something we've been talking about for years now, the direct correlation between the U.S. dollar and gold. The higher the U.S. dollar goes, the lower gold's going to go. And that's what the situation is also at this point. The U.S. dollar has rallied over the past few weeks, is trading at about 96.5 cents right now. I know that may sound a little confusing, and if you need a lesson or a further understanding on currencies, please call me and I'll explain everything to you. But it's very, very important that we understand the relationship between the U.S. dollar and other currencies and the U.S. dollar and gold. When the U.S. dollar is strong, like it was in 1990, when the U.S. dollar was the strongest currency in the world, trading at $1.10, I know that sounds, difficult to understand, but the U.S. dollar trades against a basket of foreign currencies, the British pound, the Swiss franc, the Canadian dollar, the Australian dollar, the euro, the Japanese yen. So basically, depending on what these currencies are doing as an average, it trades against the dollar. In 1990s, the U.S. dollar was the strongest currency. The stock market was extremely strong. The real estate markets were strong, and there was no need to buy gold. Gold was all the way down to $250, because when the U.S. dollar is strong, nobody thinks of buying gold. And that's what the scenario was all throughout the 90s. Then things started to change around 1999. It was at that point that I had made the predictions on CHED and radio shows throughout Canada that it was now time to sell your stocks and to buy gold at $250. And at that point, the U.S. dollar started coming down and gold started going up, and nobody could believe that gold was moving this much. Gold went from 250 to 300 to 4 to 5 to 6 to 8 to 1,000 to $1,900. We actually caught the largest bull market in history in any market, and that was the run in gold from 1999 to 2011. And then the government started and exchanges started playing with the markets and manipulating it down, and gold dropped from $1,900 all the way down to $1,100, which is basically where it's been trading in a range for the last while. It did get down to 1,050, and then at the beginning of 2016, the market rallied very strong. Gold went up 35%, went from 1,050 all the way up to 1,380. And everybody had thought at that particular point that gold was getting ready to run again. But again, there just wasn't something right about the market that just didn't sit right with me. And it was this Commitment of Traders report that I was watching that was telling me something different than what the other analysts were saying. I normally don't listen to what other analysts say. I don't like to be confused by what other people think. I just basically do my own work on it, and many of the times it's worked out to be correct. And thank God for that, because, again, many of my clients depend on this information. So what I see is gold falling further. We broke the 1310 level. We broke the 1300 level. We broke the 1275 level, and now we've hit the 1250 level. The market's trading right now just slightly above 1250. I do not believe that the 1250 level is a strong level, so I do believe that the 1250 level is not going to hold, and we're looking very short term at 12 and a quarter to 1175 in gold. Now, I'm not looking for gold to fall out of bed. I'm not looking for it to totally destroy itself. I'm just looking for gold to come back down to around the $1,050, $1,100 level, and then more than likely I'm going to be a massive buyer of gold and silver. Now, if gold does come down to that 1,100, 1,050 level, that means that silver should come back down to around the 1,350 level in that area. Right now it's dropped from $20 down to around 1,750. So again, over the longer term, mid to longer term, I'm extremely bullish on gold. I have not sold my gold. I still own it physically. I own my silver physically. I own my diamonds. You want to own everything that you can in U.S. dollar-based investments right now. You know, when they talked this week about a massive drop in the British pound, we knew that that was going to happen. After Brexit, you know, some of my clients made fortunes on the Brexit situation. We shorted, went long and short the market at the same time, and many of my clients made over 500% in one day just trading that market. But when they say that the British pound has dropped to the lowest level since 1982, that's against the U.S. dollar, which is the currency right now. So no matter what's happening in the world, all throughout Europe, there's disarray, there's financial issues, and all of their currencies are plummeting. On top of that, so is their interest rate. The only country in the world that can raise interest rates is the United States, because of the fact that the U.S. economy, even though it's not in great shape, is in better shape than pretty well everybody else's. So my recommendation at this point is very clear. It's been the same as it's been for a long, long time now. Get out of Canadian dollar-based investments. The Canadian dollar is going to drop, in my opinion, to 160 to 170. The U.S. dollar is going to go all the way up to 110. We could make 40 to 50 to 60% return on the currency alone, let alone what my private investments do. My clients are doing phenomenal at this point. We're all in U.S.-based investments. The last thing in the world you want to do right now is sell out of anything that is based in U.S. dollars. That means gold and silver are based in U.S. dollars. Diamonds are based in U.S. dollars. The U.S. dollar, obviously, is a place where you want to have some money. In fact, most of my clients are sitting with me in investments based in U.S. dollars, and we're cleaning up right now. So if you're interested in learning about how to trade in the currencies by not actually going into futures markets or anything risky, you need to give me a call, because there's tremendous opportunity right now. You know, when we read about all these scenarios happening around the world in the foreign currency markets and in gold and all that, for every winner there's a loser, for every buyer there's a seller. I'm in the alternative asset business. I don't trade stocks. I don't trade bonds. I'm not involved in trading real estate. My only focus is on the currency, the metals, the oils, the commodity markets that affect us financially. And there's tremendous opportunity to make a lot of money without going into the futures markets, which I would never put my clients into. I traded futures for most of my life, most of my career, and done extremely well. I owned one of the largest brokerage firms, commodity brokerage firms in the country, at over 7 offices and 300 employees. However, my major focus right now is on alternative assets, because every other asset out there, stocks, mutual funds, are not a good investment. 90% of the people that trade stocks and mutual funds and commodities, if they don't know what they're doing, lose their money. My clients are not in those situations. We're in U.S. dollar-based investments that you can hold in your hand, that are tangible assets. And again, I've got private investments that are paying over 25% a year and are paying in U.S. dollars. So Randy, at this point here, no matter how confusing these markets may seem, the fact is that we have a firm hold on what's happening at this point here. And I can pretty well assure you that the U.S. dollar is going to continue to go higher. Gold is going to go lower for the short term, and we're going to see some unbelievable opportunities in the marketplace. If you need to know about those and how to make money in these markets, please give me a call. I'll spend as much time with you as you need. But it's imperative at this point that you get out of traditional investments and into alternative assets, which are based in U.S. dollars.
I was reading a report this morning when they said it doesn't matter if Clinton or Trump get in the United States as president, the U.S. dollar is going to be strong. RareColoredDiamonds.com is the website. RareColoredDiamonds.com, 1-800-432-1022. 1-800-432-1022. Connect with Harold. Find out about the programs that he has where you can be making money today. Our featured diamond of the week from RareColoredDiamonds.com. Featured diamond is a 0.32 carat emerald cut, fancy, intense, purplish pink argyle. In the second half of the show, we're going to talk about the Argyle mine. The tender is wrapping up October the 12th. More to come in the second half of the show. If you'd like to see our featured diamond, go to RareColoredDiamonds.com. Featured diamond of the week. It is a beauty, a 0.32 carat emerald cut, fancy, intense, purplish pink argyle, the rarest of the rare. One of the things that was not brought up when Hillary Clinton and Donald Trump debated, and they're debating tonight again, was the deficit and the debt. Now, it was brought up by Mike Pence when he went on and debated Kane earlier in the week. Now, that is a huge problem for the United States and the world. This is one of the reasons why we believe interest rates are going to stay lower for longer, and you want to be in a position where you take advantage of that, and we think hard assets, U.S. dollar, the place to be. The IMF is worried about the world's $152 trillion debt pile. 8 years after the financial crisis, the world is suffering from a debt hangover of unprecedented proportions. Gross debt in the non-financial sector has more than doubled in nominal terms since the turn of the century, reaching $152 trillion last year, and it's still rising. The IMF said the figure includes debt held by governments, non-financial firms, and households. Current debt levels now sit at a record of 225% of world gross domestic product, the IMF said Wednesday in its semi-annual fiscal monitor, noting that about two-thirds of the liabilities reside in the private sector. I know that's a huge concern here in Canada, the debt load that we as Canadians have. Now, the rest of it is public debt, which has increased 85% of GDP last year from below 70. Slower global growth is making it difficult to pay off the obligations, setting the stage for a vicious feedback loop in which lower growth hampers deleveraging, meaning paying off debt, and the debt overhang becomes bigger and bigger, says the Washington-based fund, the IMF. Excessive private debt is a major headwind against the global recovery and a risk to financial stability. History has taught us that it's very easy to underestimate the risks associated with private debt during the upswing. Now, one thing that the United States did, and this was decided between the Congress in the United States, and they actually agreed for once, that they would lift the debt ceiling. So for the rest of the term that Obama was in office, U.S. President Obama, there would be no debt ceiling. The federal debt in the United States, if you can believe this is a massive number. Full year 2016 jumped $1.4 trillion. That's $12,000 per household. In fiscal 2016, which ended on Friday, the federal debt increased $1.4 trillion. That according to the U.S. Treasury at the close of business on September 2015, The last day of fiscal 2015, the federal debt was $18.1 trillion, and now by the close of business on September 30, 2016, last day of fiscal 2016, it has climbed to $19.5 trillion. Now, this is where it gets interesting. According to the Census Bureau in the United States, there were 18,215,000 households in the United States as of June. That means that the one-year increase in the federal debt of $1.4 trillion in fiscal 2016 equates to $12,036 per household. That is unbelievable. The total federal debt of $19.5 trillion now equals about $165,575 per household. And I know in Canada we have major concerns about the federal debt, provincial debt. We're racking it up here in Alberta, and even personal debt. And Harold, one of the things that you've recommended for a long time, and I've always been so proud of you for saying it, is pay off your debt. Be very conservative in your investments and pay off your debt. Those that are going to be living debt-free or have very minimal debt are the ones who really, when the opportunities come somewhere down the line to take advantage of jumping into very cheap assets, they're the ones that are going to be benefiting. And I've always thought that your recommendation of pay down your debt has been so important. We have about 30 seconds, about a minute left here in our segment.
Well, you're 100% right, Randy. Especially in these times, you don't want to have any debt. And the debt in the U.S. and around the world is massive, and it's going to be a problem because of the derivatives market. In fact, the derivatives market will eventually be the downfall of the financial system because it's an unregulated market that's in the quadrillions of dollars. And again, it's just something that can't be dealt with at this particular point. So again, that's a major concern for me. But the fact is that the whole world is in trouble financially. We don't need to be. We need to be conservative, pay down your debt, don't owe anything. That's the only chance you will ever have to retire with interest rates going negative is if you don't have any debt. So if you need help with that area, please give me a call. I'll give you some ideas as to how to do that.
Speak with Harold personally and privately, 1-800-432-1022. He has programs in place where you can start making money today. You don't need to sit in a GIC where you're losing money when you take into account taxes and you're earning 1%, inflation probably 2% or more, taxes, you're losing money. You're in a negative position. Speak with Harold about the programs he has in place where you can be making money today. Connect with him at rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. We say happy Thanksgiving long weekend to all our amazing radio listeners who have listened to our show for so long. Hope you and your family have an outstanding time together and a nice meal. Next weekend, we're going to be on. We're normally on Chet at 3 o'clock in the afternoon. We're going to be on from 2:30 to 3:30 prior to the Oilers pregame as they play the Buffalo Sabres. We're going to come back and talk about diamonds. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October the 6th, 2016. Our time is 9:03 Mountain. We say happy Thanksgiving to you and your family. It's Thanksgiving long weekend. We give thanks for all our great radio listeners who have been with us for a short period or long period of time. Thank you, and happy Thanksgiving to you and your family. October the 16th, next weekend, we're going to be on from 2:30 to 3:30 prior to the Oilers and the Sabres game. Normally we're on Ched Sunday from 3 until 4. Next weekend, 2:30 to 3:30. If you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We also have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. And we're taping a day early because Harold, who's a Canadian who lives in the United States, he was in Colorado, made his way back home to Florida, and now Hurricane Matthew is going to be hitting Florida. So we're wanting to make sure that we get the radio show in just in case there's any problems where Harold lives. And Harold, Obviously, we've been through a few hurricanes as we've done the radio show, but we've always got the radio shows in, and we wish you and your family all the best as you weather the storm of Hurricane Matthew that's going to be hitting Florida, you said, very, very shortly Thursday, today.
Yes, that's true. As we're taping the show right now, it's 11 o'clock Eastern, 9 o'clock in Alberta in the morning. However, the Bahamas are getting ravaged right now. It's the eye of the storm, which is right now traveling at about 130 mile an hour winds, is actually right over Nassau in the Bahamas, which is almost right across the street from us. So we are expecting that this massive 500 mile an hour storm with tremendous winds and rain is going to come very close to the coastline of South Florida. Now, I live close to Palm Beach, and this, they are predicting, is actually going to hit right into Palm Beach. So it's going to come very, very close to us. However, I do appreciate very much all of my friends and all of our clients and listeners that have called and sent emails and texts and everything. I must have received 100 of them over the last couple of days. But the fact is that I have shutters, we have underground propane, we have water, we have food, we have all the protection and a generator. So under the chance that we could lose power for a few days, we're going to be just fine. Again, I'm concerned about Palm Beach because that's where my private showrooms are. However, I'm pretty sure that everything is going to be okay. But thank you very, very much to everybody who is concerned about us, and we will definitely keep you up to date. But, you know, like the mail, we always do the show. We have never missed a show since 1999. Never missed a show during the holidays or hurricanes or any other event because it's imperative that our listeners get the information that they need to make the right decision. And again, we take our business very, very seriously. So again, thank you everybody for all your concern. I've got my fingers crossed that the storm is going to pass us by. But if it doesn't, I'm very comfortable with the fact that my home is very protected. At this particular point, again, the markets are trading. The gold market's down $15 today. The silver market's down another 50 cents. The market has fallen off substantially this week, and I do anticipate that will continue for the shorter term. And again, we will certainly let you know when is the next time to buy gold and silver, but I do see it going lower before it goes higher.
Our featured diamond of the week from rarecoloreddiamonds.com is a .32 carat emerald cut fancy intense purplish pink argyle. It is a beauty. So it's a .32 carat emerald cut fancy intense purplish pink argyle. See it at rarecoloreddiamonds.com, featured diamond of the week. If you do not receive our free weekly newsletter, the companion to our radio show, we'll send it out free of charge to you by email. And you can go through it in 5 minutes, be completely up to date, be on the same page that Harold and I are on, or you can spend hours going through all the information. It is really up to you. And just a quick update. This is from CNN now. Hurricane Matthew strengthens to a very dangerous Category 4 with maximum sustained winds of 140 miles per hour and gusts to 165. That according to the National Hurricane Center. So you can see it is a very scary situation. One of the good stories that we had this week, you can find it in our free weekly newsletter. Rare Argyle Pink Diamond Collection made its way to Hong Kong. Rising demand in China and Taiwan makes Hong Kong an ideal location for showcasing the Argyle Pink Tender, the jewels, which can be tendered with sealed bids. Mining giant Rio Tinto has a collection from its Argyle mine in Western Australia, which everyone knows about from our radio show, and they are open to tender, and that tender ends October the 12th. Rather than an open auction, they take sealed bids, and the closing date coming up here in about a week. Bidders can place offers from the entire collection, or as many individuals do just on individual diamonds. At the showing of the gems, Marie Hyam cups her hands together to show the volume of pink diamonds produced for the tender of the Argyle mine. And she's a petite woman and has very small hands. The marketing executive reinforces the message that This is a very small quality, obviously, investment, but even smaller is the teaspoon of red and velvet diamonds that are excavated from the mine, beyond the pinks. This year's Argyle Pink Tender collection weighs at 58.24 carats, with an average size of 0.92 carats, which Chaim says is significantly bigger than the other years, which the average was 0.88. The collection comprises 57 pinks, 3 reds, 1 purplish red, and 2 violet diamonds. Now, the Argyle mine is the world's only known source of diamonds that are violet because they are saturated with hydrogen. Other violet diamonds contain trace metals that give them color. To give you an idea of their rarity, over 30 years of sales, only 12 carats of violet diamonds have been offered. Just under 4 carats are available this year. Now, 2 of what Rio Tinto calls the collection's 5 hero diamonds are violets, weighing in at 2.83 and 1.11 carats. There's also a hero red diamond of 1.09 carats. Well, all diamonds are lumps of carbon that have been put under immense heat and pressure in the Earth's crust. Reds are formed by even more intense pressure, according to Chaim, adding that it's not just the mine, but it's also the geographical area. Over the last 12 years, growth in prices for Argyle Pink diamonds have been double digits year on year and are only likely to rise further as the mine only has 4 years of production left, meaning the world's only known source of diamonds of this quality will soon run out. And they go on to add, how much could you expect to pay for stones in this year's collection? According to Chaim and Josephine Johnson of Argyle, they remain tight-lipped. Diamonds are a unique asset class. There's more of a parallel to fine art, says Johnson, claiming that the type of connoisseur who buys a colored diamond might equally buy a painting by Picasso or Monet. According to Gemdax, Argyle Pink diamond prices outperformed the S&P 500, the Dow Jones, and the Hang Seng indexes between 2000 and 2015. The S&P 500 outperformed diamond prices for 26 to 2008, but has failed to match the performance since. Over the same period, pink diamonds have also outperformed white diamonds by a considerable margin and roughly tracked art as an asset class. But it's interesting to know, Harold, Argyle Pink diamonds outperforming the S&P and the Dow and the Hang Seng from 2000 to 2015. And that's one of the reasons that we have talked about Argyle Pink diamonds on our radio show for many years. Rarity, obviously nature's art, and you have, through your connections, the featured diamond obviously is a museum piece, and for that person that gets that as an investment, Harold, they're going to be very, very happy.
You better believe it. And this is something that will never, ever happen again. There is no mine in existence that does what the Argyle mine does. So the Argyle mine is in Western Australia, the East Kimberley district of Western Australia. It was discovered in 1986, and it was the largest producing diamond mine in the world, producing over 30 million carats of diamonds a year. However, most of those 30 million carats were not investment quality diamonds, they're industrial quality diamonds used to cut other diamonds. But from this mine came the world's supply. 95% of all the pink diamonds in the world come from the Argyle mine. But you're talking a tiny number. You're talking at this year's auction, at the tender, there's 62 or 63 diamonds. That's it. And most of them are not even a carat. The average size is under a carat. So the fact is they're the most concentrated form of wealth on earth. These assets never decline in value. And we've got a rare opportunity because the fact is that the Argyle mine is going to close by 2020, means that there goes 95% of the world's pink diamonds. We anticipate that the price of pink diamonds will skyrocket. Depending on the color, because there's several different colors of pinks, the cut of the diamond, the size of the diamond, all that type of thing will determine how high an individual diamond will actually go up in value. But the fact is, if you're one of the owners of an Argyle Pink, you've got one of the best investments you could ever make. And again, as I mentioned before, this will never happen again because there is no mine that produces 95% of any given colored diamond. So once the pinks are gone, we think that the price of pink diamonds will hit levels that nobody ever thought possible before. Now, there's light pink, and there's fancy pink, and there's fancy intense, and there's fancy deep, and then there's the best of all, which is fancy vivid. They're the highest saturation of color, and the higher the saturation, the more the diamond is worth. There will be some diamonds that will go up thousands of percent. There will be some diamonds that will go up hundreds of percent. But if you own an Argyle pink diamond, you've got one of the few assets in the world that will never decline in value and can increase substantially. You know, when you go into any investment, you look at two things. Number one is the risk, and number two, the reward. And personally, I always look at, when I look at an investment, the first thing I want to make sure is that I'm not going to lose my money. And that's what rare colored diamonds, especially the Argyle pinks, will do for you. You've got capital preservation. The price of these diamonds will never, ever fall because there's not going to be any more. It's a supply and demand scenario that, again, will never repeat again. And then, so we've got an asset that will never fall in value. That's very, very important. Now we own an asset that will increase in value substantially, which is, again, is exactly what we want the opportunity to do. If you're sitting in retirement savings plans, RRSPs, the chances are that you have not made money for over a decade, and you probably won't because the economy in Canada is not good at this particular point. The fact is that we are going to see major changes in currencies and everything like that. So if you've got your money sitting in retirement savings plans because, you know, the government tells you to do it or makes it possible for you to do it, it doesn't mean you're going to make money on it. It doesn't mean that it's a good investment for you. If you put your money in a retirement savings plan for the last 10 years and you haven't made a dime, and in actual fact interest rates are dropping and the market is becoming more and more volatile, you're making a mistake being in that. You're better off just sitting on the sidelines because you're not going to make any money trading stocks or mutual funds moving forward. Even some of the expert traders lose their money. So I do not recommend that in any way. I recommend much more conservative assets that will protect your equity and give you an opportunity to profit. Most of my Canadian clients are invested with me in private investments that not only are safe, but pay in American dollars and pay over 25%. I know it sounds ridiculous. I know it sounds too good to be true, but the fact is that this business has been going on for centuries, for generations, and all I did was made it available for my Canadian clients to be able to participate. So it's a rare opportunity to get paid in American dollars, which is paramount right now. If you're getting paid in Canadian dollars, which right now are trading at 132, but soon will be trading at 150, 160, 170, you need to get money into U.S. dollars, and I can show you how to do that. But again, Randy, at this point, the Argyle mine is going to close in 4 years. There will never be another opportunity to own pink diamonds like this before, especially at the prices that we can buy them at. So, again, give me a call. Let me show you what we have in Argyle pinks, and you put these away for the next 5 to 10 years, and you could be talking assets that will rival any good investment that you've ever made in your life before. That's how much we believe in Argyle pink diamonds.
Our featured diamond of the week, and it is an absolute beauty, a 0.32 carat, emerald cut, fancy, intense, purplish pink Argyle. See it? RareColoredDiamonds.com, featured diamond of the week. One of the stories that came out during the week that was quite interesting, a Honus Wagner baseball card sold for a new record price of $3.12 million. We've had record prices on diamonds, art, handbags, watches, cars. You can see tangibles. In the environment that we're in, tangibles are doing so well. And if you take a look at where we are today, it's going to be very hard to retire based on the economic circumstances of low interest rates, negative interest rates, Everyone is worried about losing their retirement money due to another financial crash. And a lot of people are asking, will we ever be able to retire? We have low interest rates. Central banks with low interest rates or negative interest rates have manipulated stocks, bonds, and real estate to a point where they are historically overvalued and could face a major correction at any time. Now, in Canada, we have Bill C-15, which was passed in June. We are now a bail-in nation, meaning if a bank went bust, anything over the CDIC 100,000, they could take and give you shares back in that bank. Find out more about the Bill C-15. Speak with Harold, 1-800-432-1022. He will explain it to you. But negative interest rates around the world, oil prices are down, weak Canadian dollar, housing crash in Vancouver and Toronto, the federal government and even provincial governments trying to cool down the housing market, a cashless society. We have a story this week in our free weekly newsletter about Sweden, how they're getting people to now start changing the money they have, exchanging it into the government and taking that money, and it becomes cashless. They're now going to be moving towards a cashless society, and they're getting people to take money they may have at home and trade it in. And there's so many different financial questions that people have, and that's why we do the radio show. And that's why Harold is here to help you retire. And if you would like to speak with Harold personally and privately, any questions you have, you can do it by calling 1-800-432-1022 or connect with him at rarecoloreddiamonds.com, rarecoloreddiamonds.com. And Harold, we find ourselves in a very interesting time. And even doesn't really matter who wins the election in the United States, whether it be Hillary Clinton or Donald Trump. One thing that you can pretty much guarantee, they're going to continue to go further and further and further in debt. And they're not having to pay out a lot of money in interest at this point because interest rates are so low. So sure, they may raise interest rates a little bit, but they can't raise them too much, because if they do, a lot of what they're going to be paying out is an interest on their massive, massive debt, not towards other items that are more important to the average everyday person in the United States. Social Security, Medicare, Medicaid. It's going to be a very interesting time over the next 5 years, depending on who's going to be president in the United States. But one thing we do know, Harold guaranteed they're going to continue to spend more money than they bring in, and they'll go further and further in debt.
They have to, Randy. That's 100%. And the fact is, you're right. They cannot raise interest rates because the interest rates would absolutely kill, the budget type of thing. So as far as I'm concerned, yes, the U.S. is in trouble, but the U.S. is the biggest economy in the world, and they can hold on. It's the smaller economies that are falling by the wayside type of thing. And the thing with the banks and the bail-ins and all that is very concerning, because the fact is that the Canadian banks are, instead of bailouts, which the government owns the banks, now we're talking about a situation where they know that the banks are in trouble. They don't want to bail them out, but they want to steal the depositors' money. If you don't know about that, give us a call. We'll let you know why the government signed C-15 bill, but it is not a good thing for Canadians. And I'm shocked that they actually let that thing go through. But all in all, the U.S. is in trouble financially, but they can print a lot of money. Most of the foreign money is coming into the U.S. stock market because that's the only game in town right now. So the fact is that no matter how bad things may seem in the United States, they're not as bad as anywhere else in the world. The other thing is, with this election, it's an absolute joke. It's an embarrassment for the United States. Hillary is a liar and a thief, and Donald is a braggart and a big mouth. And the fact is that, Americans are so sick and tired of politicians like Hillary Clinton that they would allow a guy like Donald Trump to be president. Donald Trump could turn out to be an absolute disaster, but I think we all know at this point here that just because you have the title of president, it does not mean that you make the actual decision. All the decisions are made for them. There's no way that Barack Obama was this brilliant businessman or politician that was going to save the country. He is none of those things. He was a puppet, basically, at a time when George Bush saw horrible things happening during his presidency, and people wanted to change. Now they want to change again. They don't want politicians. They want a businessman. Is Donald Trump the right man? I personally don't think so. I know Donald very well. I sit on the same board with him for the Susan G. Komen breast cancer charity type of thing. I've been to his club many, many times to play golf. But is he my choice? Absolutely not. It would have been a guy like Mitt Romney, a very successful billionaire businessman that had morals and scruples, not like Donald Trump, who's a big mouth and a liar and a braggart. But all in all, this is where the U.S. is heading. We've got two of the worst possible candidates for president, but one of the two is going to be, my guess is going to be Hillary, because the fact is that she's a politician. She talks the talk and walks the walk, and basically it's going to be close, but I see her becoming president, and I really see no change to the stock market or to any of the markets at this particular point, which is probably what Wall Street wants.
Well, tonight, obviously our show running in the afternoon, Sunday afternoon, tonight in the United States, they have debate number 2 for the presidential candidates, Donald Trump versus Hillary Clinton. On at the same time, my Green Bay Packers are playing the New York Giants. So it's going to be a pretty easy choice for me tonight as to what I'm going to be watching. It will not be the presidential debate. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Speak with him about investing in hard assets. And we have a beautiful, beautiful featured diamond this week. It's from rarecoloreddiamonds.com. It's one of the rarest of the rare from the Argyle mine. And that is a .32 carat emerald cut fancy intense purplish pink Argyle. See it. Featured diamond of the week, rarecoloreddiamonds.com. And we talk about reasons to own diamonds. Privacy. Privacy is very, very important in the world that we live. Just ask Kim Kardashian. Of course, she was taken for a little bit of money during the week. Also, portability, estate planning, price stability, and long-term growth. Those are all the different aspects of why we believe in hard assets like diamonds. It's the most secure and profitable investment, millions of years in the making. Rare colored diamonds, nature's art, private, portable, stable wealth. And you can speak with Harold about the different programs that he has in place where you can start making money today. Don't have to be in a position where you're sitting in a GIC with one of our banks here in Canada getting 1% and really making no money. Harold, we have about 1 minute left, and obviously we wish you and your family well with Hurricane Matthew. We'll be checking back with you throughout the week and look forward to taping next week's show with you. But happy Thanksgiving to you and your family, Canadian Thanksgiving, and best of luck with the storm.
Thank you very much. Thanksgiving's my favorite day of the year, so I wish I was up in Canada having a phenomenal Thanksgiving. I appreciate everybody's concern and well wishes, and thank you very, very much for that. I really appreciate it. So does my family, but I'm certain we're going to be fine, and it looks to me like it's going to hit north of West Palm Beach and possibly right into the Disney area. So, again, we'll certainly be available next week in order to tape our show. We would never miss one.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a very happy Thanksgiving, a wonderful long weekend, and a very profitable day.
Don't forget, next week, October the 16th, we're normally on 6:30 CHED from 3 until 4. We'll be on from 2:30 until 3:30 as our mighty Edmonton Oilers play the Buffalo Sabres. It will be Connor McDavid versus Jack Eichel. And congratulations to Connor McDavid being named the Oilers' new captain, youngest captain in NHL history. Connor, we're proud of you, and good luck to the Oilers in our new season. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Featured diamond of the week, a .32 carat emerald cut fancy intense purplish pink Argyle. Happy Thanksgiving to you and your family. We'll talk to you next week when we have another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. Talk to you then.